Friday, October 21st. Market analysis, Stan Ehrlich. And I'm going to start out with some very interesting situations here with the S&P 500 and the other indexes. Yesterday, I noticed that there is a chance we could be building a head and shoulder bottom formation in the S&P 500 and the QQQ. It's not in the Dow Jones, DIA, but on the date of September 30th, we have a low. It rallied a few days. At the time, you don't know that that's a possible shoulder low. But the rally, and then we have a new low in October 13th when we had the whopping bullish engulfing, oversold condition, great ER buy signal. Market rallied up to a high a few days earlier. That was Tuesday of this week. There's 9 days between trading days between September 30th and the low on October 13th. If you measure 9 days from October 13th, you will get Wednesday next week, October 26th. And I'm telling you just before something happens that will turn this into a different story. If we do not make it above yesterday's high, and we're very close, and start to come back down again, and slip a little bit, I'm saying back into this green price bar range, and I'll expand it to the right a little bit more. So coming back down to 56.5 approximately, 356.5, maybe a little higher, but not much, a point, 2 points, and it is around next Wednesday, meaning Tuesday, Wednesday, Thursday, and turn up. It will be a potential last shoulder low on a head and shoulder bottom. I've already drawn the neckline in. The minimum upside objective, if the pattern develops, will be approximately 402. For the last several days, I've been talking about 410, which is certainly within the range of expectations. My minimum upside objective is just that, a minimum. If this pattern works properly, it should at least get up to 402. That'll be the October lows, in fact, in place, past tense, no arguments. It'll be a bull move that probably will last a month or so. We're currently trading at 370. 410 is 40 points, approximately higher than where we are. The volatility these days, 40 points doesn't seem like much, but remember it's a bull move. Bull moves go up slower than bear moves go down. Bear markets collapse out of fear, but bull moves climb a wall of worry, slower. Now, what happens if we have a bullish engulfing today? And again, we are super close here to making it at above this green dashed line, which is at 72.68, I believe. To be exact, 67, 372.67, which is only about 40 cents, 30 cents away. Then you'll have a bullish engulfing, and I will not expect the head and shoulder to build, and I will expect to see more strength much more quickly, and next week could have 3 or even 4 days of rally, a new high for over a month, and on our way up to at least 410. The 402 doesn't count because that was the objective on a head and shoulder, which we will not be making if, again, we rally above this green dashed line. People who are not technically oriented don't make much sense out of this kind of stuff because they can't understand why a particular price would be so important. But from a technical analyst point of view, a chartist's point of view, it is. And here we are trying to do it. Let's look quickly at the DIA. It does not have a shoulder and head, it has a double bottom. And the double bottom has already broken out to the upside this Tuesday. And it is now already a new high ground for the last month. Already. So the DIA is doing much better relative to previous days and weeks worth of price range. Total new high for a month. And it is an outside up day, I might add. So I think we could see more strength. Now the QQQ daily data, and we're just about to break that line on the S&P 500 any second, and then I'll have to abandon my head and shoulder bottom. It was such a good story too, but we'll see. QQQ has the exact same, oh doggone it, I know what to do here. I have done this earlier and I apologize for accidentally minimizing this damn chart. There we go, and I didn't want to do that. There we go. We have a shoulder, we have a head, but no last shoulder low on the QQQ. Well, let me amend that slightly. You know something? Today's low is almost the same price as the first shoulder low, which is very typical. That's what you will find in textbooks. We do have a shortage of number of days. I would have liked to see today's low be next Wednesday, which there's still a chance of it having. But if we have an outside up day and a spider, then I'll fully expect an outside up day in the QQQ, and we'll have a breakout of previous high days. Not necessarily a neckline, although I can't say totally no to the Qs as far as that pattern being legitimate is concerned. The only thing wrong is it's happening a little sooner than I'd expect in terms of the last shoulder low, which again could be now. But that's only the Qs. If you look at the 2000, patterns totally different. Broad double bottom since June and then September, October. Lagging behind a little bit. Not that close to the high of this week, which is again on Tuesday. And has a tremendous amount of historical resistance above the market. So if there is a rally, which probably will happen if we get a S&P and QQQ rally, we'll stop. More likely than not at that green major barrier. Enough said about the indexes. You guys know I'm looking for the October low, which I think has happened. This is the chart for the, whoops, there we go, October lows. So far so good. Weekly data. This week's high is higher than last week's high. This week's low is higher than last week's low. So last week was the bottom so far. A year ago, and again and again and again. I repeat, approximately 90% of the time, October in the last 30 years has produced a buying opportunity. The October lows. Next, what should bonds be doing? I didn't want to do that. What should bonds be doing in the meantime? Well, for the bond chart, a rally will cause the short-term rates day to day to be going down some, which could be a precursor to more weekly data going down in actual interest rates. So we see today an oversold condition for the last 2 days in the 10-year notes, and we're currently higher than yesterday's close. No bullish engulfing, but if I do get above yesterday's high, then I'm going to have a green ER signal. Whoopee. That would be very great. I'd love to see that. The bonds are not going up quite as quick. They're still lower than yesterday's low. They're in the middle of the range, sort of, and I need to get above yesterday's high, which does not look likely in order to have a green bullish ER signal. So we'll see how that pans out. But they are both oversold, implying some sort of bounce, some sort of rally short term. All right, for you futures traders out there, and I started out as a commodity broker for 30 years. We have a bullish engulfing in the E-mini. I showed you this chart. So far, so good. In fact, if we close right now, this is the highest closing price since that bullish engulfing ER signal. A week ago, Thursday, a week ago. Yep, that's right. Which is good. Progress. Next chart. 10-year notes, we just discussed, a little higher on the day, oversold, looks like it should bounce, rally some, maybe a little bit more than what is apparent at the moment. Next, oversold also on the long bond 30-year for the last 4 days, but again needs a little more work. Next, live cattle now getting overbought 3 days in a row. The bullish engulfing I had a couple of weeks ago was great. Market started to go up, went sideways a little bit, didn't violate any rules, and in the last 5 days, zoom, up you go. Good signal, great trade. Next, crude light. I'd like to see more weakness in order to support a stronger economy, less inflation maybe. Right now we've got a couple of weeks going down. I've got a sell signal here. I can't give you a very optimistic or strong opinion about it going down, but it does look like previous support levels have been broken, and that's in the last several weeks, twice. And the rally did stop in some resistance, a very broad resistance area, and we're starting to head down the last couple of weeks. So maybe we will see more weakness, which would support a little stronger stock market. Next chart. Natural gas. Already did it. New lows for months, but now oversold, so it should bounce a little, but I don't think too much more than, say, 5.4, maybe up to about 6.00. But it's heading down. The trend is now down, and gee whiz, don't you love it? Bearish engulfing ER sell signal on the top of the market. The damn day it topped out. That's what this trading system, 100% automated trading system, is built for. Next chart. 3 days ago we got a bearish signal right on smack dab of the high of the chart for heating oil. It's starting to go down some in the last few days. We got a buy signal on the bottom. That's pretty good. We got a sell signal on top. I told you this is what this is built for, and it does do it a lot. Not every time. When we're wrong, we don't lose much, period. Next, buy signal on the bottom, first low of a double bottom. YM futures looking pretty good. Upside breakout. We talked about it earlier. What do we got? Bean oil, soybean oil, a little overbought at the moment. Already an upside breakout a few days ago. I like the up move for another 75-cent dollar challenge. It's only 71.60 at the moment, but it's a little overbought, so you could see a little bit more down, maybe to 67.5, 68.10, something like that, and then up. Next chart. Sugar. Bearish engulfing, almost on the top, not quite. Down every day since. Not down very much at the moment, just slightly. And I expect to see more weakness. 18 is highly likely, and I think it could dive into this trading range also, maybe down to 17.25. Next chart. We've got cocoa. Nothing significant here. Pass it. Next, oversold condition in rough rice. No particular great signal at the moment. Next, we've got coffee getting cheaper, but it's been oversold for several days, over a week. So I think a rally is imminent any day now. Frankly, I would have said that a couple of days ago, but it hasn't happened yet. Next, soybean meal, kind of neutral. Buy signal at the bottom. Nothing I can say here that's particularly great. Next chart. Soybeans themselves, also kind of neutral at the moment. Needs an upside or downside breakout one way or the other. Big sideways trading range most of the year, essentially starting in late January or early February. Big top or bottom. Can't decide which yet. Next. Platinum. Great sell signal there, and a fantastic sell signal at the top. Ladies and gentlemen, we just have an outside up day now on the S&P 500. We just broke through the hive yesterday. This is now a bullish engulfing to the second. Assuming we don't come down too much and continue to rally higher. Let me turn the alarm off real quick here on this so it doesn't keep going ding, ding, ding on me. Good. Alarm turned off. We could see a significant amount of strength before the market closes in 2 hours. 372.60 momentarily. 373.456 is not out of the question at all. We'll see if I get follow through. That's exactly what I'm hoping for. Dipping down slightly at the moment, no big deal. I got to go back to my futures. So, sell signal smack on dab on top of the market on the platinum market. Also on the top over there, next to the high here, and we have one recently that's pretty good, but platinum has rallied sharply, so the 4-day break was it. Profitable trade for a few days. Futures contract, that was pretty good for futures. And I'm kind of neutral at the moment. Next, OJ. A little overbought last couple days. Today it's starting to slip back down a little. Obviously an uptrend overall. It appears to be waiting for a little bottom on a reaction on the downside, and I hope I get a green bullish engulfing. We'll see, but I'm neutral or a little bit bearish at the moment for OJ. Next, gold. Possible double bottom, bullish engulfing today. This is a bullish engulfing outside up day, double bottom formation, pretty accurately too, and I did get an ER bullish signal at the bottom of the market on September 28th at almost exactly the same price that we have bottomed out so far today, and it looks like gold is now a buy. The risk is a stop below today's low, and the upside objective, I'm just going to give you an educated guess here real quick, is something about 1,850. Next chart. That's happening today, real time. Next. Overbought, sharp up day, getting up toward resistance. This is live hogs. I've gotten several great signals right here, March 31st, and on the top of the market for months earlier and months since, on February 23rd. A little bearish at the moment because of it being overbought for several days and at resistance, so I sure as heck wouldn't be a buyer here. I don't have any sell signal per se, but I think it's going to drip back down somewhat. Next, high-grade copper. Buy signal a couple of weeks ago. Not doing the best. Sideways. We'll see if it starts to make new highs. Then I'm looking for more of a follow-through to the upside. But we did get a fantastic sell signal way back March 7th. Real quick here, silver. Not tickling my fancy at all recently. Sideways trading range. Can't decide and provide you with any particular great signals. Next, oats. Actually, same comment, long-term bear market in progress, testing support. I think its support's going to get broken. I think it's going to drop down below 370, probably 360s, real soon. Next, nothing to work with on wheat, except apparently wheat was affected profoundly when the war broke out, and we saw over a week worth of limit up touch, limit up closes, limit up all day long, and finally, guess what? On the high day, a bearish engulfing ER red sell signal at the top of a screaming bull market. That's what this is built for. Another good sell signal here, not quite the top. Otherwise, at the moment of wheat, pass. Corn, pass. Nothing going on. E-mini, we're back to the very beginning. And ladies and gentlemen, forex is my last little group. We've got a buy signal in the euro dollar at the bottom of the break on September 28th. We have a bullish engulfing today at this point. So I'm expecting higher levels, and I think this low could be a low for months to come on the euros. Not sure about upside objectives. I would expect, frankly, at least 104. I'll give it a 104, maybe higher for the moment. And as you might expect, a bearish engulfing on the dollar index and a bearish engulfing today, big sell signals. I like the downside on the dollar index and the long side of the euro. You guys have a great weekend. Signing off, Stan Ehrlich. Bye-bye.